that group within our group, right? Excelente, Senor Ken. Thank you very much. Muchas gracias. So let's share the screen here and first look at not that one, but let's look at Thinkorswim, and I've got the regression channels, the regression channel with 0.5 and 1 full standard deviation, both above and below that main channel. You can see in kind of a purplish color right there. S&P hit all-time new highs yesterday, as you can see in this candlestick chart. And Chris, let's start with you. Given that this regression channel, you and Justin had set it with a left anchor on April 2nd, 2020, and a right anchor on November 11th, 2020, it seems to have really nicely fit the current action.
Mm-hmm. Yeah. Although I got to say, I'm not paying so much attention to the regression channel because right now I'm more focused on the NASDAQ and especially the Qs and how extended they're getting. And so they're back to 6.8% above the 50-day moving average, which is, I think, where they were before we had that the terrible one-day sell-off.
Let's check that right now. Yeah. Through yesterday's close, well, I'm looking at SPY, and that was 3.7% above the 50-day. So kind of in a nice spot.
Yeah. So the day before the last week's sell-off, it was 6.8%, and it closed yesterday. The Qs I'm talking about, not SPY, at 6.8%. So we're back to that, getting kind of extended, and you just got to be, on the lookout for a sell-off.
You're right about that. And David, given that also the NASDAQ hit an all-time closing high as well as an intraday high, could you tell us about any changes in your portfolio, exposure-wise, sector-wise, over the past week?
Over the past week, I would say even over the past month, I've been kind of almost flatlining, maybe going up a little bit, but I just haven't had any stocks that have had a nice run that would offset some of the stocks that I've gotten hit on. So when I get into this position, because I had such a nice move at the beginning in the first 3 or 4 months of the year, I'm playing a little bit more defense here, and I do have a lot of cash, and have cut down the number of positions I have. And it always seems like every 2 weeks you get this big one-day hit down, or 2 days, and then I actually raise some more cash, and then it comes right on back. So it's turning into a kind of a very to me, outside of the averages, a very choppy market, trying to find exactly the right spots to be in, the right stocks. Rotation is rampant, where it's 1 or 2 days you get a nice move in a group or an area, and then it rotates into another group. So because of that, I've raised a lot of cash, and I would say if I'd add all my portfolios up, it's at least 50% cash. So I'm much more defensive than really going out and pushing the envelope here.
I'm glad you actually specify the amount of cash. And my follow-up question would have been, if we kept going up higher, if things looked like they were getting a little frothy, how far would you go to, being 100% cash?
It all depends on the individual stocks. If if they're all moving and it goes farther, the market gets more extended and mine are participating, then I'm just going to go with that. But if not, if mine are underperforming or starting to break down, then I'll just take them out one by one. You don't really have to know exactly what's going to happen in the next week or months or 6 months, but react every day with how your individual stocks are doing.
Well said. And Ken, looking here on Thinkorswim in the bottom left corner, just like you mentioned, the small caps look like they were set for a week open, and you can see that the RUT, Russell 2000, is right now down about 0.7%. So just as you noted, some weakness. Do you think it's mainly focused on the banks, or do you think there's more to that?
Well, financial services.
And I think you're on mute now.
I get the award today.
Yeah.
Yeah, well, financial services gets a fairly significant weighting in the IWM. So it was interesting. We had a good day of outperformance from the financials yesterday, but the IWM is still kind of grappling with its 50-day moving average here. It kind of went below the 50-day line last week. Had a good day Friday, I think it was, closed maybe just a couple points above the 50-day. So, yeah, small caps have been under pressure. It's definitely the lagging index at this point when you look at the Dow, S&P 500, and Nasdaq. I'm not overly concerned. Like David was saying, David Ryan was saying that you really just have to look at each stock in your portfolio. I still have a lot of stuff that is working nicely, but some stuff that hasn't worked where I've decided to exit at a loss of sometimes 3%, sometimes 4%, but I'm about probably 65% invested myself right now, and looking to put money to work, seeing some decent setups out there. Really like the look of Fox Factory, FOXH. That is setting up nicely. So you kind of scan through charts, and you see stocks showing good action at their 10-week line. So overall the landscape looks okay, but I'm definitely a little bit defensive at about 65% invested at this point.
Well, a great point by everyone regarding individual stocks, right? If we're all picking stocks differently, we're going to have different outcomes on a daily basis. But just jumping on to Ken's point about Fox Factory, FOXF, it's one of the handful of sector leaders stocks that is from our computer-generated screen. You can see that it hasn't quite broken out, but we have a brand new story by Juan Arencibia, our markets editor, who wrote in about FOXF and why they're doing so well, especially with desert vehicles in the sector leaders column. So going back to the leaders, the IBD Live Ready List, I wanted to confirm, in fact, that Bill, B-I-L-L, that is one of 56 names in the Ready List. And you can see on this middle left column, FIGS, F-I-G-S, is leading the upside with almost a 2% gain, followed by PAA. Chris, you might want to talk about that one later, because that's one I think you found, and it's a low double-digit stock, maybe perhaps an IPO. Swim, we've talked about a little bit. SE, also leading upside. And if we scroll down to the downside, we can see that basically the declines are somewhat controlled, rather mild. We're not seeing 5-10% plunges in the Ready List. Right now, PLCE, BNTX, SPR, and BILL, B-I-L-L, ERJ, which was the IBD stock of the day, Brazilian aerospace firm, down 1.8%. I think there was big news on BA as well, right? Ken, you highlighted.
Yeah, they're not going to be delivering nearly as many 787 Dreamliners as they thought. So there's just a lot of execution issues going on at Boeing right now. A lot of people losing faith in this company quickly.
So that might be a knock-on effect on the entire aerospace sector. We'll hopefully take a close look. But for now, the NASDAQ is holding quite nicely, just down 0.2%. You can see the S&P 500 down a little bit less than that. And the yield on the 10-year Treasury bond currently 1.35%. So that's been kind of herky-jerky. Up five basis points, down 6 basis points. Now we're up yesterday, and now we're down again today. But we'll keep a close eye on that. Let's go over to now Marcus Smith here. We go to daily chart, and I've expanded it to 125% size, so hopefully it's a little bit easier for everyone to see. And why don't we go with Bill right now, BILL. And you know what, David? This is the only stock in the financial software group that is actually on the Live Ready List. So must meet a lot of that CAN-SLIM criteria.
Yeah, well, on the it's a recent new issue. I mean, from a few years ago, they actually haven't made any money yet. So you're not getting the current earnings or the annual earnings. You're getting some very, very strong sales increases where you can see they're actually accelerating in the last